good morning traders and investors from each and every part of the world that you're joining this series of the daily morning market call from. My name is Kefa Eric, and if you can hear me, kindly comment good morning so that I know we can proceed with certainty that everyone is on board. So good morning Joseph, good morning Mudomi, good morning Steve, good morning Mark, good morning Meshak, good morning everyone, good morning. That's a good data sample to proceed now. Like I said, my name is Kefa Eric, one of the market analysts here at HFM. HFM linking you to the global markets to assess various asset classes and take advantage of opportunities they are in. Now, this is going to be a pre-recorded YouTube video to mean that you could find this video later and possibly share with your family, friends on our YouTube channel at HFM Kenya. Kindly like, subscribe, click on the notification button and share. And as our commitment to you, we will be producing much more content that is aimed to filling educational gap so that we participate in these financial markets from an informed perspective so that we make informed investment decisions. Now, you'll notice that I'm denying the requests to record from your end because you could find this YouTube video on our YouTube channel at HFM Kenya and possibly get hold of it from there. So let's proceed. So we will discuss economic concerns, economic data. We'll discuss a little bit of fiscal policy and move on to the charts to proceed to technical analysis. And it's quite an interesting time of the year. We are just midway of the almost completed the midway of the first quarter of 2025. We are in the beginning the third week of the second month of the first quarter. So a lot is coming in, and we are going to be interpreting it as we proceed. Now, from an economic data point of view, we know that in the previous week we have had a number of economic data being printed. We had PPI, we had CPI, that is inflation. This is from the United States, and our focus and lens as always tend to lean in the United States so that we have a feel of the global economic situation. Without outstanding, from the HFM platform, when you go to hfm.com and you come to tools and education, when you click economic calendar, it's going to take you here where you're going to see the data which is coming out. Now, into the week, we are having quite a number of high impact news coming from Australia, coming from London, coming from Canada, coming from New Zealand. And you see, until Friday we have a full packed week, so it's going to be quite a volatile week, which is what we traders and investors like to see, so that we are able to benefit from market direction by speculating on the appreciation or depreciation of various asset classes. Now, with that withstanding, our focus today is going to be on indices. We're going to look at S&P 500. We are going to look at Dow Jones or US 30. We are also going to look at NASDAQ or US 100. And we're going to see that the consolidation that was happening last week is seemingly having a breakout. So we have a relief, and investors are now getting more confident. On the other side, we are going to look at gold and see its bearish momentum that it has been creating from late last week. And for easy explanation would be each and every time we have looked at precious metals and stock, we pay attention to international concerns or fears which investors will consider before getting into a particular index or a particular stock. And what I mean by this, in the previous week, as we are coming into 2025, we had quite a tensed market. and this tension was brought about by the uncertainties by Donald Trump administration in imposing tariffs, which are taxes on imports, right? And this was causing gold to be in a bullish trend, and now we are going to see it's appearing to be in a bearish trend. On the side of indices, we will see that we are having a breakout to the upside to suggest that the cooling of this tariff or trade wars is taking away fear from the market, and investors are getting more confident to diversify their investment portfolio in things like stocks, indices, and take and a little bit of removing their investments from the safe haven, which happens to be gold. That's why we are seeing a bearish trend. Now, off to the charts. Good. Let's begin with gold. From gold perspective, we see that on Friday we closed with a bearish marabuzu. The candle printing right now is attempting to be bullish to print to the upside, but let's go to a lower time frame to see it even much more clearly. We see that it's forming a double top, and we see this bearish momentum attempting to take out this low. Now, in the instance that we have bearish momentum where price keep on printing higher lows and lower lows, we will see the lows being taken out to confirm the cooling of tension, but this could be a much more risky approach because overall we know that gold is in a bullish trend. So it is important to take note of concerns which involves tariffs in the global markets, so that to trade gold more consciously. In addition to that, another sachet would be in the Middle East, the war which has been cooling off between Israel and her belligerent neighbors. We see the return of hostages from both the Palestine to the Israelites, and we see the Israelites also returning hostages which were taken into hostage during the war. So we see a little bit of cooling of tension, which explains majorly why we see gold attempting to be in a bearish trend. So if these concerns proceed, then we might likely to see gold in a bearish trend. But as long as we have the fears and uncertainties in the market, we'll possibly see gold printing in a bullish trajectory. Off to indices. Beginning with S&P 500, we go from a daily time frame. We see that there is an attempt to break out the all-time high, which was created at 6155.90. Now, we would want to see this high to be taken out, and we know that it is backed by economic forces where tariffs cooling off, tensions cooling off from the financial markets, giving investors back their confidence to keep investing in indices and stocks, or basket of stocks, if you like to call them that rather than indices. And it is important to note, while trading indices, that is S&P 500, Nasdaq, and Dow Jones, they tend to follow what we call reports. Now, if the earning reports are high, it is going to attract more investors, which are going to have the bullish trajectory proceed. If we have the reports coming low, of course we are going to see a bearish trend to the downside. But as it is right now, reports were coming high into Q1, and now we have a cooling market taking away the fears and concerns. So we expect it to be bullish, and we are going to be looking into this into the week. A similar scenario we are going to see in US 30, or the Dow Jones if you like, attempting to print price to the upside. We want to see the highs being taken out, breaking away from this consolidation. Also in Nasdaq, which has clearly broken out, we want to see it keep on printing price to the upside, reflecting this economic global situation in context right now. Now, let's check in on oil. Oil as a commodity has been printed to the downside. We see right now it is trading at 70.66 liters per barrel, dollars per barrel, which we want to see it coming and touching the 67.20. And this need or want, this language is due to economic forces pushing oil to be in a bearish trajectory. I believe we called it in the previous weeks from way up here, and oil has been printing to the bearish side, attempted to make a forced breakout here, but now we see oil keep on making lower lows and higher lows, and this is brought about by the pressure from the United States to push oil further downside, and to push oil further downside as we move into the year. Now, just a short while. As a disclaimer, this by any chance is not meant for financial advice. It's meant purely for educational purposes. Kindly do your due diligence, and most importantly, remember to observe risk management so that you have longevity in the financial markets, to keep correcting your mistakes and improving on your strength, for you to have a much more profitable impact. So guys, see you tomorrow, the same place, the same time, to do things the same way that has proven consistently profitable. Until then, God bless and take care.